really is not.
But it's so much of that's about education. So you've got to explain to them why they should trade with at all. Why should trade with you? So they're then positive.
So what is the answer to that question? Why should they trade?
Because certainly from a UK perspective, it's about the lack of financial education. There's a lot of people there with money, a lot of money sitting on deposit at banks, earning 2-3% interest, yet inflation is running 4-5%, so they're losing money. And so whether it's them day trading the S&P or buying into long-term investment strategies, I just think there's so much that needs to be communicated to a wide audience to say, look, you need to take ownership of this. You've got that money sitting there, it could be working harder for you. So whether that is them, just investing in an S&P tracker or them day trading euro dollar, it doesn't, that bit doesn't really matter. It's just people need to understand that can happen. And I guess the other thing you mentioned earlier about what made me think there was a gap in the market here. I'm a father, I've got 3 wonderful kids, and when they were early, the eldest is 20 now, but when they were early, papers were full of news. Yes, the government were going to get financial education up on the agenda in schools and all this kind of stuff. They've left, the oldest 2 have left, and the amount of financial education they've got from school has been minimal. What they've learned has been talking to me.
I was just going to get there with you, but do you think is it possible to get to the mindset of a 30-year-old about financial education, or do you think we should move on to the basically the alpha generation or the Gen Z? Which one do you think is easier and more effective?
What I'm seeing, this maybe isn't answering your question, but a couple of weeks ago I was at a conference in London looking at the prop trading industry, and the number of young adults that were there,
being 20-something,
like 18 to 24, 25, the number of them there who were clearly wanting to engage with financial education. Now, whether we think prop trading is appropriate or not, for me, it's not the hill nor there. It shows that there is a way of engaging this audience where, if you strip that out, too many people are in a position where they don't really understand the difference between a current account and a savings account. How it actually works.
The more gamified it is, the more contagious it becomes.
But I think we can learn off that. We can take the gamification elements, take what we have from AI to help people have tailored learning plans. So and I think there's a collective need of the industry to, it's not going to happen. We're not all going to act together, but just for people to think a little bit more smartly about how this, how we can. Because there's no shortage of education material out there, but it's how do people engage with it? How do they access it? And I think that's where we can.
Coming to the accessing point, how do you think the mediums of media could help us achieve this better? We're talking about financial education, right? So there are different ways you could read about it. You could watch something.
Yeah.
You could be told by a friend or by a teacher. What do you think what are the roles of mediums in this field of financial education?
I think, short form video, there's a lot of criticism of it, but that seems to be the perfect way of doing it, because at the end of the day, if you're trying to explain to someone a not an overly complex problem.
Ray Dalio could not go wrong with this. I mean, if he's done it.
Yeah, but if you want to explain to someone the difference between a current account and a savings account, and that someone is, someone who's got no financial understanding at all, have it in their Facebook feed, so it just comes up in 60 seconds. So there's no sales message in there, nothing. You just say, current account works like this, savings account works like this. Same with things like compound interest. 60 seconds, just so people understand that if they invest.
And then you pitch at the end of it what you should do with this information.
There's a call to action at the end, exactly. But it's by being very transparent and just doing it with the intention of educating them.
Not selling them,
making sure they leave. After 45 seconds they've learned something, and then in 15 seconds they've got a call to action, and they can make a decision as to what they do. And I just think because of the way we can disseminate this information, we've all got smartphones in our pockets. We see this stuff all the time, whether we want to or not. It comes up.
And it actually makes me think that one important point could also be recognizing what their problem is. What do you need to know that so I can make that kind of content I created for you? What do you think is the main things that we need to see? Like, for example, let's say we're going to have 5 topics of 60 seconds, short videos over YouTube, on our Facebook, on our LinkedIn, wherever, TikTok, wherever people see. What do you think their pain points are? What do you think is so exciting about financial markets that if we pitch, they cannot say no?
Well, I think the problem is the inverse of that. Far too much content that I see created is aimed at the top 5-10% of traders, investors, people, who have got that knowledge. Can I get a better technical analyst than the next broker to make these clients think I want to trade with them because they've got the relationship with? And you're just chasing an ever diminishing number.
But it just looks like it's meaning.
Who's explaining to someone who comes along and just wants to learn someone wants to learn what how you find support resistance. Let's use technical analysis.
Yeah.
There's a chart. Someone wants to know where the support line is and where the resistance line is and how they've been arrived at. They don't want to start, getting into a really
dinosaur times and stuff.
Yeah, and again, something we picked up at the show in London, the pop show, was people talking in a different narrative. Instead of support resistance, buy zone, sell zone. That it was far more engaged, understandable. So I think there's. That's
simplifying it in that sense kind of dangerous, but they see one resistant, they see one area, they're like, I know what to do now.
Well, there's always that risk that you could say, well, little information is a dangerous thing, but the problem is too many people have got no insight whatsoever, and perhaps the TA example is not perfect, but where I think the roots of the financial education issue is that people don't even understand to say the difference between a current account and a savings account. So when you're suddenly offering them an ETF or some kind of leveraged derivative, or they just see the dollar signs thinking, well, either it's not for me, or they just see the dollar signs and think, I can do this.
Make it for me.
Yeah, I can do this, and in 2 days I'll be a millionaire and I can retire. So we know it doesn't work like that. So I think there's, we have to start somewhere. But for me, the important thing is that the brokers have that end-to-end education, that accessible, high quality. Again, Presco, we advocate high production values. So make sure that when people see something, they're not going to turn off after 2 seconds.
We're actually trying to achieve that at the same time.
It's a great wall.
Our studio in Istanbul, we have live coverage from morning till night. We're trying to cover most of the valuable sessions in Paris. And what we're trying to do is to give all the information necessary for you to make a smart trade. So you wouldn't have to go to the websites, you wouldn't have to read, you just focus on your trade.
Yeah.
And I tell you everything you need to know. And after that news, we have a live trade session where individual traders, they come, they say they talk about their strategies, and whoever is watching them, if they want to enter a trade with them, you won't. If you just want to clear out what they have to say, they won't. We all post, and this is actually a marketing part of our strategy. We're a brokerage.
Yeah.
Right, and this is the ePlanet TV. So we're trying to without asking them to follow us or deposit or do anything, and just purely giving information that needs to know. Otherwise, you will not be able to make the best decision because you don't know. So many things are happening. But sometimes we had we might the thought here, but everything was connected to the finance, Bloomberg, everything. So you wouldn't miss anything. You can following out what's happening in the world that I don't know about. So and it actually works quite well. So I'm super excited to have this conversation with you because you understand this better than anyone. You're dealing with it. Personally, however, outside the TV space, on my Instagram, on YouTube, but on LinkedIn, I'm primarily focused on behavioral economics. So I feel as you said, people do not know the difference between the accounts, right? So that is for you to read about. I don't want to talk about that. I would really like to talk about biases, however. Biases on, averting the risk on the RNS. All kinds of biases that will have actually limit our mind towards the financial system. So I feel if you talk without a financial part, only about the alleys, the back ways of their brains and bring it out to them, they would actually be more open to get the heart of it is, to get the heart of education, which is the difference in the accounts.
And I think that's very evident in the UK because we see the amount of money that people have sitting in cash because we think that, and especially since the pandemic, people have been conditioned into only earners of money.
Exactly.
I mean, the UK has wealth disparity, very heavily wealth disparity. But at the top end, you've got quite a lot of people who are sitting on decent amounts of cash. Barclays had a report out the other day that reckoned there was, I'll have to come back with the number, but it was billions and billions of pounds sitting uninvested. And if that was deployed into the market,
Why do you think that is? Are they still scared? Are they still...
people are scared, and this is the other thing. The regulator in the UK is getting quite UK-centric, so apologies, but the regulator in the UK has been very risk-off. Very.
That is actually true. I was checking the productivity rates of the UK, and it's like this would be a make or break for the UK economy, because I've been trying to focus on what's happening, what's going to happen in the next 5 years in Europe, the UK, Americas, the Middle East. And the only thing that I found that could actually save the economy, the UK economy in comparison with EU, was the productivity rate.
Yeah.
There's so much room for growth, but there are so many people detached, they stressed and detached from all of this, and you actually might be right. It might be because of the bad memories from the pandemic on.
Well, I think it actually predated. We think that it was triggered around the global financial crisis in 2007, 2008, and off the back of that, some people got burned because we saw a lot of people sell at the bottom as well. They saw their portfolios plummet. They cashed out. Not leveraged, but the unleveraged, long-only portfolios. They cashed out at the bottom. Of course, the market went back up, and they're like, don't want to do that. You've got some very high-profile commentators in the UK who say, equities, that's not the place for your average retail investor. These are big blue chip companies that can do really well. So you've got all this cash sat to one side that could actually be working better for the individual and better for the economy, but it's not. And then it's further complicated with this transaction tax called stamp duty that applies to a lot of equities in the UK. But comment I've seen come around a few times of late is, so you're in the UK, if you want to buy shares in Aston Martin, the car manufacturer, you've got to pay 50 basis point stamp duty. You've got to buy Tesla.
That is a what?
So they're actually, if you want exposure to the auto sector, the UK government is incentivising you to invest in an American company.
That is actually, it explains a lot to begin with. I'm kind of shocked that some system like this exists. Is that even legal?
Well, it's legal. It dates back a long time. But obviously, what it predates is the fact that now it's very easy to be able to buy stocks in an American company. And I've got a trading account. I buy physical stocks in a US company, fractional basis, no cost. And really tight spreads. So, whereas historically you're going to have to pay all these costs.
So you don't want to do that.
But now we have this bizarre situation where the government is taxing you, penalising you for doing this. The point that was made is the revenue that the government generates from this £3 billion a year, that's been static for years and years and years. So the revenue's not growing, which means people aren't trading more UK stocks.
So what do you think? How do you think we can solve that?
Well, it's really challenging, because if they abandon it, the media will latch onto it to say, "Oh, this is a sop to the wealthy," and all this kind of stuff. So there's that. I mean, I guess one way of doing it would be to look at that $3 billion and apply it as a levy to the people who are paying it at the minute.
Well, there you go. You have something in this.
Yeah, so there are solutions, but then you're going to get all the industry pushed back and whatever. But you just have to see, you have this ridiculous situation at the minute. Whereas at least if people weren't being levied that explicitly, and the government say, okay, we're only going to collect $3 billion a year from this, so we're going to split it down over the
might as well
over the providers, and we know it's going to stay at $3 billion, but at least it would then be free to invest in those stocks. People would, we believe, invest in them.
So basically not fear-based motivation, but maybe some kind of
there's fear in there, but also there's the cost. But those people who are investing, they've got no incentive to invest in equities.
That is true.
Unless again they've got that nationalism, that pride. Maybe they're associated with them. They work for a company or anything, whatever. They may buy it on.
Do you see that happening a lot?
I haven't got data on that. I'm just trying to think psychologically. Why would someone buy Aston? Well, Aston Martin's a bad example because their share price doesn't seem to do too well. But you have that situation where why would you buy a company when you're having to pay an extra tax
Right.
to get exposure to that industry, that sector, whatever? You know, you're going to have another reason. Perhaps it's, you know, if they're doing particularly good stuff on an ESG basis, or you know, if you believe in their product, or that, you know, they're longer term company. But again, that stamp duty doesn't apply to small cap companies on the AIM market, which is the junior market in London. You don't pay stamp duty on that. So if you want to invest in an upcoming cancer research company, green tech, or even a miner, they may be listed on AIM. There's no stamp duty.
So small cap is the way to go.
Well, yeah, there's a lot of potential in small caps.
Maybe with the interest rate breaks down now, maybe this is the new era for it.
It is, yeah, hopefully low.
It wasn't like this. It has not been like this for the past few years, and I feel like now there's going to be more opportunities for whoever wants to be a part of this financial board, being like small caps, like investor, like retail investor. Now there are more doors open towards a person who's interested in this field. Where do you think the best place in the financial sector is to have your money in? Is it stocks? Is it the government? Is it?
That's a tough call, isn't it? It's I think there's smaller caps, both in smaller caps in the US. I think you've got a lot of
Like Russell 2000.
Russell 2000, yeah. And because you've got to take your rotation there out of the Magnificent Seven.
Yeah.
You know, the valuation's overblown there.
Well, we keep waiting for that to happen. It does not happen.
Well, yeah, I mean, I guess Tesla's the outlier there because they have a bit of a roller coaster on that. But when it happens, everything's going to come down. But presumably those seven are going to take a bigger bump. The other problem that I often say to people is, if you're not dollar denominated, be really aware. You invest in US stocks at the minute, the dollar could tank as well. So
that's actually like the best case scenario for non-US denominated investors, because the more the US valuation comes down, the more for other currency valuation goes up when you're invested in stocks specifically.
But if you're invested in a US stock at $100.
Oh no!
You know, and
that does not apply.
That comes down 25% on the market correction, but also the dollar.
What is the alternative? You know, I understand that very well, but what is the alternative? If not the U.S. markets, where the?
Well, I hear there are some very strong growth stories. India and Southeast Asia, parts of Southeast Asia are still tipped for good growth. I think obviously we've got this whole question in terms of precious metals, rare earths. You know, where does that go now? Gold, I mean, you keep thinking, well, when's that going to turn? And it's every day, it's just up.
Do you think it's ever going to turn? If it wanted to turn, you would have by now.
But it has to be, well, I don't know, are we then in a situation where it's the layer behind that that's driving, because so much of that appreciation is driven by credit, not by people putting a dollar down to buy dollar gold.
Supposing it's feeding anyway.
Yeah. So I think there's, you know, we're going to see a lot of change, a lot of disruption. It's going to be an awful lot to keep your mind across in terms of stable coins, and you know
that whole thing scares, you know, everything.
Well, but again, this I guess points back to where we started in terms of education. We have to make sure that people are, you know, you're scared by it.
I am.
And you're well versed in financial markets, but actually it sounds like we need to embrace it because because what it's doing in its potential to preserve wealth. Obviously, there's risk.
All that scariness is because it's moving too fast. And as you said, maybe now that I'm thinking about it as an audience, if I see a 60-second video about this, I would not have. Maybe I would just think about it for like some minutes, but then I would let go and be like, yeah, it's not my game. We need like something more structured.
But that's it. I think you started at ground level. So what it is. And I've been learning some stuff about this in the last couple of weeks, so it's been very interesting.
Yes, since the bills have been passed, I've been trying to follow them as well, just moving too fast. But once I knew BlackRock was in, I was like, this is my direction, like nowhere else to go. Diving.
Yeah.
He's the guy though.
Yeah.
He's running the whole thing, if I'm not being.
So what that's been.
That was a great few minutes. I lost track of time, but great insights that you just gave us. I really appreciate that.
Something I'll if you're not recording now, because I'll need to explain something to you that when this Barclays figure was released, I think it was £600 billion in untapped money. And it's a couple of days before, the Bank of England is the notes out on stablecoins, saying we're going to have to limit the amount of money that retail investors could put to stablecoins because they're worried about essentially the capital formation of the network. So, hang on. So, what the two things that I've seen here is because they said if we see that capital flight, then the credit market's going to dry up. So, this 600 billion sterling, the little people have got sitting earning no money, is actually oiling the wheels of the underlying market. So if that goes, so I don't like conspiracies.
I know, but you gotta give this up.
You start thinking, well, hang on, I'm in a situation where they want people to remain filthy because that money can sit in the system. If I put that money in a stable coin, I'll get 5-10% yield.
That's not a conspiracy, that is just basic economics.
It's a safe as house, and I can bring it back to fiat whenever I want. But that money is earning a yield because it's powering that system. It's being paid for by the gas fees or whatever.
Yeah.
So actually what we're saying is the benchmark for money on deposits shouldn't be 0. It should actually be 5% or 10%.
So the wheels could keep not falling apart.
It's very good. Because if that money, if everyone pulls that money out, goes into stablecoin, where does the how do they feel?
How would they be able to limit the people though? By how would they encourage them to keep the money in the market, not in stable?
Yeah, well,
regulation. What am I saying? Regulation.
Well, but again, it's very easy to work around regulation because it's so easy now to move money overseas.
Is it so easy? How easy is it? It's not really that easy. I look here.
I could fund accounts. You know, you don't put £1 million in it one go, or $1 million. You know, but you do a bit, and they're not restricting the money per se. They're just saying we've got to limit how much you're going to put in stablecoins.
What?
So I buy some shares in Singapore, and then I sell those shares in Singapore to buy a sale.
What has got to a lot of trouble, and not everyone does that. So I think it's a win-win situation for whoever can see that clearly and goes through different doors, and whoever cannot, they just stay.
But that's it. It almost seems that there's bizarre incentive to not educate people because if they go,
they're going against the crowd here.
Like if we just leave it in a cash ISA.
Because not many people make money out of that, probably by educating you will not.
No, but the intermediaries would make money, but on the flip side, the
conspirators.
Do you then, the Bank of England said it's going to leave funding null. A short-term. I mean, they seem to think it could be resolved over time, and your limits would be temporary. But I just thought, hang on, this is exactly the same situation here. They're saying
it's because you have that financial awareness. So many people do not have that, and you are actually the best person to be spreading the words. And the more you talk about it, the more you're going to be able to help people, and that's enough.
I think just to stress, I don't support it as a conspiracy theory. It just seems we've got these two things happening at the same time, and it's
not necessarily. But I mean, I love the conversation that we just had, and I'm gonna just check out what you're. I also read about Monk.
Monk, yeah.
Yeah, what's happening there?
So that's my my other company. So I set that up in 2003, providing PR support for companies in the financial services sector. So I work with a number of brokers, fintechs, exchanges. It's very much a boutique consultancy, work one-on-one with people. I do very little marketing because I'm fortunate. People like what I do and they know my name and they're the ones ringing me up. Can I help them? So so again, I've built quite a lot of deep knowledge in some very interesting pockets. So whether that's CFDs, I do a lot of work in private securities in the UK. There's a movement happening there again, which has the potential to reinvigorate the economy. Let's hope it works. But so I'm able to build up these bits of expertise that make me very popular with clients and journalists. Obviously. So,
I'm glad to hear that. That is so interesting to hear. Do you have any projects happening? Do you have anything that excites you? Maybe a new line of work?
Well, the private securities, there's a new bit of legislation come out in the UK called Pisces.
Pisces.
So that's for trading private securities, unlisted securities, in a more formalised manner. So I'm working with a company.
Unlisted, like what exactly?
So these are privately held companies, but they have shares. So they may be a startup, they may be a family business, but they're not listed on exchange. So, but they're incorporated and got the cap table of shareholders or registered shareholders.
Well, you give them a stage, basically.
Yeah, and it's so there are markets out there at the minute that are venues, and put them venues that allow them actually buyers and sellers. But Pisces formalises that. So the legislation was passed earlier in the year. The London Stock Exchange Group got the first Pisces license, and then this one of my clients is hopefully going to land there.
Is this governmental? It's a system that is being developed, or is it like?
No, it's led by the City of London, by the by the institutions there to provide a platform that will allow these. Because again, we're seeing the number of IPOs has dried up. I know the UK's been particularly bad. I think that's a global phenomenon anyway. So again, to facilitate liquidity events there, to help with exits, you've got a company that isn't prepared to IPO because they don't think the market's going to give them the valuation they want, but they can. And they don't want to go to a trade sale.
It's like a baby tournament for them to be able to compete in the real world.
And they have to adhere to certain governance requirements, in terms of transparency, and so it's less onerous than a
legitimized racing.
Yeah, but it's less onerous than a main listing. But it just provides that platform for for getting some liquidity. Because again, if you're investing in a company, say startup, and it's now worth 10 million pounds, and you've got 10% of that. You might want to take that out and invest it in the next company that scale it, but there's no real easy exit. This gives you the way out.
Well, it sounds like an untouched market, and it's.
Well, the US have something similar. They're kind of front running it. That's front running's the wrong word, but they've been taking the lead here for some time. So they've got a lot going on. But it is it's meeting the current market need because you've got these lack of exits through lack of IPOs. People don't want to take a knockdown price on the trade sale. This gives them another way out, and recycling capital is the phrase that we keep saying. It means that you'll invest. You've made 10x on that. You can take that out now and find the next growth company to put your stake in, and hopefully get another 10x on.
How come the UK has started so much later than the US? You said they're running not really the very best for
I think it's more a thing how these venues have existed in the UK. There's one that you can actually go back to the to Big Bang when there was a big shake-up in the London market in the late 80s. These match bargain venues have existed a long time. Tech has allowed them to develop. So there's a company I'm close to called JP Jenkins. They've integrated with taken this paper-based system. Now any broker with a connection into any of the maze like Iris or Winter Floods, they can plug in, they can see the prices, they can place orders. That can all be done, seamlessly. And this is almost like the next iteration of that is to put a bit more of a regulatory wrap around it and formalise it, and hopefully make it a place for for really solid growth, and meets that market need, which wasn't there 10 years ago because people would IPO to get the exit. But now you've got these companies, growing companies.
That is actually very smart on educating people about this, which is relatively newer.
Yeah,
that would be a way to go.
But again, it's just education. It's just such a big, there's so many little things that we each of us know a lot about little parts of finance, and it's trying to share that knowledge in a way that you want to digest and accept.
One last question. I know that you've been speaking all day long, and I'm super grateful for you to be here. How do you think the schooling system could help this, some application like this will help that case?
Well, one of the...
I think even people want this to happen.
Yeah, I think one of the challenges that is faced by people is the fact that the teachers, very skilled people, very talented people, but they've got none of this knowledge on about it. So I did wonder whether pipe dream sort of stuff, could, in the same way that there are programs in, the UK and I'm sure many other countries worldwide, you go in and help kids to read in your local school. Could they not get financial service professionals to give up half an hour a month to go into
Why don't
school? I think it's too complicated a subject. There's all the risk liability.
It's just basic.
It is basic, and I think that's again a part of the frustration. This shouldn't be a difficult thing to do, but
Different motives. We don't want to get into it. I hear you loud and clear. Well, I really appreciate your time.